live everywhere. Oh my goodness. Oh my. Oh hell yes. Gotta put on that party dress. Let's do this. Yay. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Look at that bright light in the background. What are we looking at? I don't want to look at that. Ooh, Yahoo Finance. I love finance. Bring it up. Yahoo Finance. We're going to use it sometime today. Looking at Rob Dragon. Dios mio. Oh, take a look at Tesla. We have Gelman. Gary. G-Man. Sassafras. All right. What else do we got? Joshua. Thank you, Mr. Joshua. So people want to take a look at Tesla. So let's take a gander at Tesla. All right, come on. What are we waiting for here? It's not moving. That's not a good sign. Somebody wants to talk Tesla for the 8,000th time. Nope. Joshua, you're a little bit inaccurate. It's not 8,000. It's like 15,273 is what it feels like. But, hey, they like Tesla. Why the hell not? Okay. That being said, let's see where we are and let's get the ball rolling. Oh, pen. Here we go. So, you really want to look at Tesla. TSLA. All right. Look at it. High of the year, where it was a year ago, where it is now. Look at the motion. Where has the buying and selling gone? Buying, selling, sideways, undecided, back up, sideways, undecided, down, and then back up again. Right there's where I want to look at the last 90 days. Oh my God, my voice sounds terrible. Not enough honey this evening. Okay, how many times do you get asked about hymns and beyond a day? Well, beyond, not that much. Hymns, I'd say about 2, maybe 3 times a week. Tesla, at least 2 or 3 times a day. Beyond, about once or twice a month. That's about it. It is what it is, I suppose. All right. I want to look at the space right here. That's what's happening now. Back here is a year ago. That's a year ago. That's 6 months ago. It's not really going to do us any good other than giving us an idea of the momentum. What has the other buyers and sellers thought? Has there a lot been panicking? Has a lot been, steady keeping your cool? Well, apparently not, because she shoots up, 480, drops down to 220. That is a more than a 55% drop. Then she goes from 220 back up to 480 again. So what is that telling you? Last year, we were in the 400 to 480 area. Now we're back to the 400, 480 area again. Could that give you some kind of idea that this might be what it's worth to most people? Could be. Pete, what will Meta do now till February? Sit tight, Pete. What? Okay, yeah, just sit tight, Pete. We'll get to that in a second. I guess that Beyond Meat meme has died off. Tesla stocks ask about earnings. Ooh, well, all right. Anyway, besides the point. Now, what basically are you looking for? Because I've been doing this for quite a while, and I shared openly what I'm looking for. What I'm looking for is simple, safe, predictable, consistent 1% per week. That's what I'm looking for. Normally, I don't do companies that don't have dividends because I don't want to be a doomsayer or a party pooper or, someone who pees on your parade. But if and when, okay, stocks go down, stocks go up, stocks go down, stocks go up. Now, when a stock is going down, if they're paying a dividend, you're at least collecting something, okay? If they're not paying a dividend, when the stock goes from 480 all the way down to 220, you get nothing along the way because they don't share their profits. Alrighty. Well, I like dividend stocks because they share the profits and they are predictable. So we got a good idea of how they perform week after week after week, or more or less, let's call it seasonally. Okay? Because the stocks that I do, or that I like, they're easy ones. Let me give you, got a pen and paper. Here we come. You ready? List number 1, the Dividend Kings. These companies have been consistently profitable for at least 5 decades. So why wouldn't you have them on your list? List 2, the Dividend Aristocrats. 25 years of increased profits. Year after year after year. Higher and higher and higher profit. Why is that not on your list? List number 3, the Dividend Champions. 25 years of increased profits. You might think that the champions and the aristocrats are the same. No, the aristocrats have a little bit more rules than the champions do, but they both have over 25 years of increased profits. And then the 4th list, we got the dividend dividend contenders. Now they have 10 years to 24 years of increased profits. Didn't quite make that 25-year list, but they're working on it. Needless to say, runner-up, honorable mention, let's take a look at what Warren Buffett is doing. He's in the news all the time. Everybody thinks he's doing something wonderful. And just when somebody says something, whether it's true or not is irrelevant. It depends on the reputation of the person saying it or doing it. So anytime, try co-hosting. Yeah, we'll do that another time. So anytime someone says, hey, Warren Buffett just bought this stock, you know how many people are going to jump on that just because Warren bought it? Well, why not? I'll jump on the bandwagon too. Needless to say, Warren Buffett's list. Whatever's on Warren Buffett's list, I'd like to at least take a look at it, see if it fits. For the most part, they usually do. Not the point, though. 1981. What's happening? For now, I'm going to call you Cool in the Gang. It's Cool in the Gang. You know why? Cool in the Gang was cool in 81. All right, anyway. So, let's take a look. Just because you like it, let's take a gander. A year ago, we're going to need the glasses for that one. A year ago, 359. And we topped out last year in the middle of December. And that was 487. All right. Well, from there, just about everything else. TD stay right there. Bottom, right there. 213. Now from the 213, she jumped right back up to the 475 area. Up, down, up, down, up. Definitely to the upside. Now the interesting thing is, we don't know when to buy or sell Tesla because it doesn't have any dividends, which means we can't plan the movement. Now what do I mean by plan the movement? Well, a dividend stock has a tendency to do a repeatable or a repetitious or, repetitive, however you want to look at it. They do the same things over and over and over again. Okay? They have a tendency to increase in price just before the dividend. Why is that important? Well, let's go here for a second. Jump over to here. Dividend, EX dividend calendar. All right, so if you go, I'm going to put it to you this way. The way I look at it, I trade by the numbers, 1, 2, 3, A, B, C, so on and so forth. I look for the best of the best. How many companies have been consistently profitable for over 2 decades? There's about 300 of them. Fine, I'll take all 300 and put it into my Rolodex. For those of you who don't know what a Rolodex is, that's why we have Google. Anyway, my Rolodex is actually the calendar. The calendar tells me exactly when what company is going to pay their dividends. So I take all, they pay the dividend, these little green dots. Just before a company pays their dividend, they have a tendency to increase in price. So by knowing ahead of time when a stock or 300 stocks are going to move predictably based on historical performance, because think about it, historical performance, that's like saying Christmas comes at the end of the year. Yep, it does. Valentine's Day comes in the first quarter. Yes, it does. Summer starts in the second quarter. Yes, it does. Certain times a year, certain stocks move predictably. That's called seasonality. Knowing when a stock is going to move consistently, well, it gives you an edge. Well, great. Now I know it's going to move. What am I going to do? All right, so here's a question I pose to everybody. If you knew Tesla was going to go up, what would you do with that information? Would you believe about 90 to 95% of the people all answer the same question? All come up with the same answer. Wow, it's been a long week. Actually, tonight's my Friday night. I go Sunday, Monday, Tuesday, Wednesday, Thursday. I don't do Friday nights and I don't do Saturday nights. So yeah, my voice is a little hoarse. It sounds terrible. 3, 4, it's about 5 or 6 hours a day. Talking to nobody. Because nobody is answering me back. Only thing I can do is just see the little inscriptions on the screen as they pop up. Other than that, I'm carrying on a conversation by myself. All right, so let's get back to what I was saying. So just before the EX date, all right, there's 4 dates to remember. Just so, refresh some of your memory, and for the new people, 4 dates to remember when it comes to investing in a dividend stock. First of all, let's go back a little bit further. Hold on just a bit. All right. First and foremost, you should always figure out where you're going. What is it you want out of this journey? What is your agenda? Mine, simple. Predictable, safe, and consistent 1% per week. That's my agenda. That's what I want. Now, I like to have all the odds and probabilities stacked in my favor. So after trading for about 30 years, now I'm not saying I found the key, I'm saying it's the holy grail, I'm not saying anything. I'm just saying that after all my years, I've come to the realization that I am perfectly happy with 1% of my portfolio every single week. All right, now, if I wanted to, I could sit in front of my computer and make a shit ton of money, but that's not a motivating factor for me anymore. Motivating factor for me is to have something to leave behind to my children and my grandchildren, have a wonderful retirement, and not ever have to worry about money. And I'd like to be able to have my children and grandchildren not to ever have to worry about money. So yeah, I've been studying money and finance, oh my God, since I got out of the service. Yeah. It was like middle of my very first corporate job. That was back in the 84, 85. Or was it in 83? It could have been 83. Anyway, back in the 80s. I came to the realization because somebody asked me a question. Why is it that some people seem to have better lives than others? They seem to have more money. They seem to be better looking, better dressed, have nicer cars, live in nicer homes, go on better vacations. Why? Why? It just doesn't seem fair. Well, life's not fair. It was never meant to be fair. So why is it some people's lives are better than others? Maybe they see something we don't. Well, it was at that point in the early 80s I started my insatiable desire to find out about money. Not that I had any, but I wanted to be prepared because I knew for a fact that eventually I will have a bunch. So my early 80s education started about money. and investing and all that kind of nice, neat, fun stuff. So here we are today. It's a simple, safe, predictable, consistent way for me to get a 1% weekly return on my account. So if my account has $50,000 in it, every single week my goal is $500. If I have $100,000 in my account, well, my goal every single week would be $1,000. It's 1%. Now, I don't say I made 15. No, I say I make 1% because most people can understand 1%. Because when I say, hey, I made $160,000 this month, well, you're probably thinking, how the hell did you do that? Well, because it was a big freaking nut that got me that. It's not the amount of money you should be thinking about. It's the rate of return that your money is giving you. We're all on a separate journey. We all have a separate goal in life. We all know what pushes our buttons, what makes us sleep soundly at night. So figure out first, step one, figure out first what is it you want out of this journey. Me, 1%, simply, safely, predictably, consistently, every single week. So that being said, I had to come up with a trading strategy. I didn't know I had to come up with a trading strategy until 2008, my 9-year-old daughter says, Daddy, what are you doing? Can you teach me? How the hell do you teach a 9-year-old to invest in the stock market when most adults don't get it or don't understand it? So the challenge was, for a 9-year-old, simple, safe, predictable, consistent, no way for her to lose. Now, I say that only because her rules were a little bit different. And I'm going to share them with you. You ready? The 5 rules. Rule 1, never. Now, this was for my daughter. I'm going to change it for you guys because it's a little bit different because you're adults. You can make your own choices. For her, no, I wasn't letting her make her own choices. Okay, I'm saying this is the list. Okay, there's actually, we check every single week. This week, there's 10,688 companies. We'll check again next week. It'll be a different number because, you know, as I'm doing this, I'm watching every single week. The number gets higher and higher and higher. But anyway, besides the point. Okay, so for my 9-year-old daughter, all out of the 10,688 companies, it was only Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, anything on Warren Buffett's list. Those 5 lists. That narrowed it down to just 300 companies. Great, 300 companies, easy. We throw them into the calendar. This is what you buy this week. You don't have to buy it this week, but that's what you look at. Now, that's just one of my lists. I got about 10 lists, all having a different view on, you know, the whole grand scheme. But still, for my 9-year-old, never buy something that's not on the list. That could have been the key factor because she's not looking at Tesla. She's not looking at Netflix. She's not looking at, what's that other one? Anything. If it's not on the list, she was oblivious that it even existed. Okay, if it wasn't on her list, it didn't exist. Like your name, thank you very much. What do we have here? Max, how you doing? Tree Raji, SRFM. Okay, we'll take a look at it. Give me a minute. Rule 1, buy something. Now for you guys, never buy something you don't want to own long term. Okay, never buy something you don't understand completely. For a 9-year-old, it was simple. Never buy something not on the list. And I created the list for her. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, anything on Warren Buffett's list. Now, you can add anything you want to that list. You want to add Tesla? Fine, add Tesla. They don't have dividends. It's very hard to find out when they're going to move predictably. Okay? Because if you knew for a fact that Hershey stocks go up in the very first 2 weeks of the year, very first 2 weeks of February. Come on, we all know why, right? You got Valentine's Day, Easter's right around the corner, the 2 biggest chocolate days of the year. Hershey has a tendency to go up the first 2 weeks in February, year after year after year after year. Okay, Apple has a tendency to go up in the third quarter. Okay? Finding out when a stock moves predictably. That's why I went to the dividends. Because stocks have a tendency to go up in value just before they're getting ready to share their profits. And that's what the dividend is a portion of the company's profits they give back to the investors. Okay, so if the company's profitable, you get money. And then if they're more profitable next year, you get more money. That was the promise that was made. That was the golden ticket, whatever, the golden goose. I have no idea what you want to call it. Equate it to whatever you want. But still, companies are willing to share their profits. Now, out of the 10,688 different companies this week, only about 5,500 actually have dividends. So you really need to ask yourself the question, why are you investing? Are you investing for cash flow, or are you investing for stock or capital appreciation? Now, you can do both, but it's always good to understand what it is you're looking for, because a dividend stock company will do certain things, where a growth company will do something totally different. They take the profits, put it back in the company, and it goes up faster. If that's what you're looking for growth stocks. I'm 61. I'm going to be 62 in a couple of weeks. I don't want growth. Okay? All right? I'm not working anymore. I don't punch a time clock, which means I don't go and work and nobody gives me a paycheck. So the money that I have to get my bills has to come from my efforts of investing my own money. Now, when you come to retirement, you got two choices and only two. One, invest yourself, take responsibility, or here you go, you do it for me. Hand it over to someone else and they'll do it for you. But they're going to do the exact same thing or close to it that I'm going to show you tonight for free. Find a good company, buy it at the right time, do the right trading strategy, make sure that all the numbers work, never sell at a loss, and just take a look. Right, so here's the 5 rules. Rule 1, never buy something you don't want to own. Rule 2, never sell at a loss. It just doesn't make sense. Rule 3, make sure the company is consistently profitable. For me, I want 2 decades. Oh, this is not sounding good. A little better. 4, weekly options only. Okay, I mentioned a little bit earlier. I make plenty of money getting 1% every single week. I could make more money if I wanted to sit in front of my computer all day. I have no desire to do that. I've done that, been there, even got a couple of t-shirts for the journey. Not what I'm looking for nowadays. What I'm looking for is simplicity, predictability, profitability, safety. That's what I'm looking for. Okay, you want to join in? Fine, wonderful. Do me a favor. Make sure companies you're asking me about have dividends. Well, it's a dividend investing channel. We're talking about dividend stocks and investing for weekly cash flow using dividend stocks, because there's a layer of safety with dividend companies. And that's what I want to do. I want to be safe, and I don't want to lose any money. Who do we have here? Mark! I got back in Kohl's EX date on the 10th. Okay, Mark, we're going to take a look at Kohl's in a second, because I still have my Kohl's. I have no idea why someone didn't take it away from me. I bought it. The thing shot up like a rocket. I sold some of the option to buy it from me, and they never exercised it. The thing doubled in price. From what I bought it from, it doubled in price. Somebody had the option to buy it from me, and they never exercised their option. So I still have my Kohl's at 16 and 17. Well, it's not 16, yeah, somewhere in that area. All right, anyway, we're going to take a look at Kohl's in a little bit. So as I was saying, there's 4 dates to remember when you're looking at a dividend stock. And those 4 dates are simply, ready? Number 1, it's called the announcement date. That's when the company comes out and says, hey, everybody, this is James from Dividend Stock Talk. This is how much money we made, and this is how much you're going to get yours, and this is when you're going to get it, and everything wonderful and beautiful. It's just when they say what they did and how much you're going to get. The announcement date. That's it. They just make a big show out of it and make the announcement that, hey, this is what we got. This is how you're going to get yours. Okay. Right. Number 2. This is the important one. This is called the EX dividend date, hence the name of the calendar. And these little green dots are the EX dates for all these companies. Okay? So, date number 2, the EX date. That is the last day the stock trades before the dividend is paid out. So if you want to collect the dividend, you need to buy it before the little green dot. I was just remembering I forgot something. I said, damn it, I was supposed to get that yesterday. That being said, if you want to collect the dividend, you got to buy it before the EX date. Date number 3, date of record. It's usually right after the EX date. Basically, all it is a recording in the ledger of who owns the stock on that particular day, the date of record. On that day, who owns the stock? That is the person who gets the dividend. Okay? Last, 4th date, the payment date. That's when you get your check. That's all that is. So, if a stock such as Illinois Toolworks paying a dividend on the 31st of December, if I want to collect that dividend, I could buy it on the 30th, the 24th, the 9th, the 3rd, the 11th, but I want to buy it 2 weeks before, on a Monday. Why on a Monday? Because I like to do covered calls. They're simple, they're safe, and they're predictable and consistent. It's like an ideal trading strategy specifically for people such as my 9-year-old daughter. Simple, safe, predictable. Okay, great. So if I buy here, I can get 1%. Wonderful. And then if I hit my target, great. I get all my money back. 2, I can do it again. If I hit my target, wonderful. I get all my money back. If I don't, I can do it again. Collect a 3rd time and collect the dividend. So every week that I own any stock, I'm getting a weekly cash flow from. That's what I'm looking for. Simple, safe, predictable, consistent, 1%. All right, so what are we looking at? We just looked at Tesla. Tesla doesn't have any dividends, so it's challenging to find out when's the right time to buy. Okay, this is what we're looking at. Here's our 30-day high. 30-day bottom. Now here we are. Down, up. How much higher is it going to go? Well, the bottom's at 380. We're at 454. So 380, 454, that's $74. That's a $74 increase from the bottom to where we are today. Now, $74 on a $380, $400 stock, it's still a nice little jump. Are people going to jump out and take profits? If so, shouldn't this baby start coming back down eventually? Or do you want to jump on and take the chance of it going up? More or less, I don't do that. Because from here to here, if it's over 10% movement, I don't want nothing to do with it. So bottom 380, 10% would be 38. So from 380, add 38 to that, that's 410. That here is a 10% move. No, this thing went up 20%, 25%. That's a big freaking jump. Yeah, no thank you. But if you like it, more power to you. Alrighty, so what else do we got? Ooh, wait a second. Coals. Let's take a look at coals. All right, just what I thought. Okay, so coals. High, low, where was it? Where is it? Look at this. Down, up, down, up, down. Okay, that big, huge jump. That's what I was just talking about. Let's zoom into that and I'll show you. Zoom in, zoom in. All right, here's the last 30 days. 30 days ago, we're at 17. We shoot up to 19, drop down to 15, shoot up to 16, and then skyrocket up to 25. So I bought right down here. Okay? Went up. I still have it. Now she's going up again. So I sold somebody the rights to buy it from me at 16. And this thing went from 16 to 25. That's a $9 increase, which is over 60%. From here to here is about a 60% jump, and nobody exercised the options. I still have them at 16, and I sold someone the rights to buy it from me at 16, and nobody bought them. Fine, I'll take the premiums. I don't mind. It's consistent cash flow every week, and I will do it every single week. I still got my calls, and next week I will sell the 16s again. You know, I mean, I probably won't sell the 16s, because if that 16 expires, I'm going to push it up to like 2023. I still own the stocks. I could get rid of them, but it's the funny thing about the stocks. It doesn't matter what price you have on them. I'm not looking for the price to change. What I'm looking for is the company consistently profitable. If they are, I don't care about the price. Honestly, I don't. 15 or 25. Now, here's why I don't care. Because if I buy 100 shares, that's equal to one contract. So whether I buy at 15 or 25, one contract is one contract. What I buy and sell for is irrelevant. I have the ability to sell one contract. And when you sell one contract, option contract, you have the opportunity to pick. Okay, see this little line right here? Okay, this is purple, this is black, this is black, this is purple. And there's a little line right there. Okay, that's called at the money. That's where the action is. The price right now is $22.58. Okay, where the action is right here between the 22 and the 23. That is called at the money. ATM. Hold on a second. See if I can do this. Okay, you ready? Let's do this for a second. Wrong way. That might be a little easier, right? Okay, check this out. Here's that line I was talking about. Right there. It's going to change that. Okay. Come on. All right. Here's that line I was telling you about right there. Okay? This is black. This is called OTM. Out of the money. This is ATM. At the money. That's that line. And this is called ITM. That's in the money. Okay, calls, puts. Okay, out of the money in black. Out of the money in black. At the money, all the same. In the money is in the purple. Okay, so as long as I have a contract, 2 contracts, 5 contracts, 15 contracts, irrelevant what I paid for it. The only relevance where it comes in is when it comes to selling an option. So at the money, if I bought the stock at $22.58, I'm going to sell the 22 right here. I'm going to sell that one. Okay, if the stock drops, well, then I'm going to send a couple of them out of the money. At least 4 strikes out. 1, 2, 3, 4, at least. Now, I'm picking up 17 cents. Not quite 1%. But as the stock drops, I still want to get some kind of cash flow coming in. As long as I hold on to those contracts, hold on to that stock and not sell it. Remember rule 2? Never sell at a loss. Doesn't matter what the stock drops down to. If I bought it at $22.58, it can drop down to $2. I will still have that many contracts, which will allow me to sell at the money, in the money, or out of the money to bring in some cash flow. Remember, simple, safe, predictable, and consistent consistent cash flow. That's what I'm looking for. So the only time I pay attention to the stock price is every single day. Because the very first question I ask myself, what did I buy it for? Second question, what did I sell against it? Next question, where is it at now? It take you 2 seconds to figure it out. What did I buy it at? Okay, there it is. Where's it at now? Okay, there it is. What did I do? Right there. It's really simple. Okay, so once you buy something, that's your entry fee, your entry ticket, whatever you want to call it. If I buy it $22.53 forever and a day, my purchase price will be $22.53 until I either dollar cost average or till I sell, one or the other. But regardless of what the price I bought it for, if I can control 5 contracts, I can pick up a weekly cash flow every single week. And that's what my goal is. Simple, safe, predictable, consistent, 1% per week. All right, let's go to the next question. All right. But I get that question every single night. What happens when the stock goes down? They all go down. And we all go down together. I don't know if you remember that. Okay, cool. All righty then. So, Kohl's, let's get back to it. All right, yeah, so I have Kohl's down. Ooh, holy cow. Aha! All right. Alrighty then, back to where we started. All right, so unfortunately, as much as I love Kohl's, definitely not the time to jump in. You got this big jump up, now she's coming back down again. So Kohl's, I say at least a week, somewhere around here, 2022. So I'm going to write down Kohl's for next week. Even though I already own it, it will be on the list as a possibility for next week. Maybe not next week, maybe the week after. Because we get one more day for this week. That's it. Tomorrow's the last day of the week. So, yeah, I don't see this thing dropping down far enough for it to turn back around. I still think it's going to come down further, probably down here somewhere, before it's time to jump back in again. Okay? SRFM, Tree Raji. What the hell is that? I have no idea. SRFM. Sorry, dude. No options. No thank you. Rule 4. Make sure it's weekly options only. That's for me. That's my rule. Okay, so we're looking for weekly cash flow. The only way I'm going to get weekly cash flow from this thing is to sit in front of my computer watching these little things. Yeah, no thank you. Okay, I'm at that point in my life I have no desire to do that. Alrighty. What will Meta do now to February? Don't know, don't care. Sorry, Pete. There's 10,000. I've said it a while ago, several times. 10,688 companies. Meta does not fit my schedule or my parameters, so I don't even bother with what it's doing. Really don't care. All right. So what do we have next? Let's sit down and say hi to those guys down at YouTube. How you guys doing in YouTube today? Let's get comfy. Let's get comfortable. All right, here we go. What are we doing? Wow. What is all these questions? All right, up, down, trader. What's happening? All right. Hi, I'm watching in the hospital. Ooh. And most hospitals have an increase rate 25.9% or lower. I have no idea what that means, because we're talking about investing in stock market. What hospitals are you talking about? The only thing that I know of would be NHU. UNH. Yeah, UNH. That's the only one I can think of. All right, let's keep on keeping on. What else do we have? Hey, Joey's in the house. Is Webull worth investing into? I honestly could not tell you. It has not been around for 20 years. Okay, see, I'm looking for companies that are successfully profitable for at least 2 decades. That's 20 years. Weebles doesn't fit. Don't get me wrong, it might be good. Might be. We shall take a look. Uh-oh, he wants to take a look at Weeble. Why do I want to take a look at Weeble? Oh, what the hell is that? Holy cow. This thing was at 11 bucks? You got to be kidding me. It's at $11 back in April. And then she shoots from $11 to $80. And then come back down to 8, 9, 10, 11. Well, I call that an anomaly. Okay, so here's your last 30 days. 30-day high, 30-day low. Where was it? Where is it? Look at the motion. Down, up. So it was at $7.50. Now it's at $9.60. That's $2. $2 increase on a $7 stock is more than, I think, right around 13, 14, 15%, something like that. Okay? I no. And I don't even think they have dividends. So, what else do we have? Oh, wait a second. 962, the 9s, 10s, 11s. Okay. All right, for the fun of it, because some of you guys like Weeble, let's take a look at the 950s. Okay, lose 12. Okay, it still looks pretty good, the 950. So let's do it. Let's see what it looks like for those of you that like Weeble. All righty. All right. Let's take a gander. And here's Johnny. Are you ready? Buy one covered call bull. 12 December 25. That means this option contract is going to expire Friday afternoon next week, 3:59 p.m. Because at 4 o'clock when that bell rings, ding, 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 you can't do anything else, and that thing becomes obsolete. 950 call option on the bull stock. My profit's 32 bucks. It's only $900 for that one contract. So let's check out what is the rate of return. Figure out your rate of return. You take your calendar, you take your profit, 32 bucks. You divide it by your investment. Now remember the investment. So people panic and say, what do you mean it's cost me? No, it's not costing you anything. You're putting your money someplace where you deem is safe. That's what you're doing. You're putting your money into the American economy, into a company that you choose and you think is a safe space for your money. And then you're going to do a covered call. Basically, you're going to buy it, and then you're going to turn around and sell it. Hey, I bought this. No, I don't want you to buy it. I don't know. Let's take a look. Okay, so if I buy it, 962 tomorrow morning, I sell the 950s, I'm walking away with 32 bucks. Now you're probably thinking 32 bucks ain't a lot. No, it ain't. But the $32 profit is for just one contract. And one contract is only 918 bucks. Well, how many contracts can you get? And then you get all those contracts, and then you multiply that out. Now how much is that 32? It's 3.4%. No matter how you look at it, 3.4% is not bad for 1 week. Especially considering we're only doing this, 5 or 10 minutes a day. 1% a week for 1 hour of my time. Okay, so it's called a 10-minute trader for a reason. I jump in, I take the list for this week. Because the list changes every single week. Let's go back to the calendar. Oh, wait a minute. I want to save this one. All right. I want to save this one. Ah, wrong page. Wait a second. Oh, yeah. Okay, I remember this. Hold 1 second. Hold 1 second. I was trying to show someone something earlier. Got a little carried away and I forgot to erase it. Okay, let's do this again. All right, here we go. Here we go. Bull. Whoops. Nope. Let's try it one more time. Bull. 12 December. Oh, the 950 call option. 32 is the profit. 918 is the investment. That is a 3.4% for 1 week. Love it, 3.4% for 1 week. If you like bull. If. All right, so what's next? What's next? Lonnie, how are you today? VFC. Well, let's take a look at VFC. Why not? I actually have some VFC. Interesting, right? Nifty. I'm going to say no. Let me explain to you why I'm saying no. Okay? Excuse me. There's a good reason why I'm saying no. Come on. Having an issue. Technical difficulties. All right, here's our high, here's our low, here's where we were, here's where we are. Get this thing out of my way. All right, okay, top, bottom, where was it, where is it? Look at this, up, down, sideways, up. What's going on there? That right there is something that I have nothing to do with. No, thank you. Okay, 30-day bottom, 30-day top. I don't buy anything at the top. Me, never, ever, ever do I buy anything at the absolute bottom or the absolute top. Because you just never know where it is, where it's going to show up. They just show up one day. Sorry, dude. VFC, Lonnie, no. Not this week anyway. I'm going to say 2 weeks from now. Because it looks like, okay, yesterday's close is here, today's close is there. So the close is less today than it was tomorrow. It could be an indication that it's coming back down. Could be. Okay? We went from 14 to 18. Okay, 14 to 18 is $4. That's more than 22, 23%. From here, not from the bottom. Because from the bottom, she went up here and had profit taking there. Then shot up. So I don't buy at the high. I'm going to write it down for 2 weeks from today. That's next week. That's 2 weeks. VFC. VFC is officially written down for 2 weeks from today. Yay. All right. Okay, Lonnie, 2 weeks from today. Okay, what do we have down here? AL and no dividend. Wow, won't like it. Not old enough. Yeah, probably not. All right, nope. Oh, you like it though. That's one thing. And looking at the option chain, weekly, blah, 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 the options look pretty good. Okay, Joey, I ain't even going to do NVIDIA. He thinks it's funny. Y'all think Netflix will be able to buy Warner Brothers? Ooh, that would be pretty cool. Well, let's check it out. NFLX. NFLX. Okay, try one more time. Maybe that was a sign to not do it, but I'm going to say no. Or I want to keep my eye on it. Reason being, here's the high. Here's our low. Here's where it was. Here's where it is. Look at this. Up, down. That don't look good at all. Let's zoom in a little closer. A little closer. What do you think? Okay. Up, down, up, down. I'm going to say no this week, but here's the thing. If you like Netflix, keep your eye on it. Tomorrow, Monday, Tuesday, the bottom is showing up. Okay, how low can it go? And no, it's not a limbo contest. It's an investing contest. We know who Netflix is. We know how many we know how many subscribers they have. They must be raking in the dough. But she's dropping. Here's the top. Here's the bottom. Today could be the bottom. Tomorrow it could bounce and start heading back up again. So yeah, I want to keep my eye on Netflix. Not that I'm going to buy any because I don't have any dividends. Go figure. All right. Next, who's got something good? Something good. Tell me something good. I forget who sang that song. Pete, how you doing today? Jim Carvey. Tell me that you like it, yeah. Tell me. Wait. Amazon still sells Rolodex. Holy cow. Felix, how are you this evening? Nice to see you back. SB81, good evening. Okay, Pete. Alex is in the house. Here's Alex. Uh-oh. Good thing I bought VSCO. Oh my goodness, Mr. Snow Miser. I'm Mr. Heat Miser. I'm Mr. Sun. I'm Mr. Heat Blister. I'm Mr. 101. They call me Heat Miser. Whatever I touch starts to melt in my clutch. I'm too much. Don't. Okay, so VSCO, no. Sorry, dude. I don't do monthlies. December, January, March, June. The reason I don't do monthly options, because you only do it once a month. That's why it's called monthly. Now, have I ever seen an option on a monthly that gives me more than 1% every week? Yeah, it happens. Not very often. Let's check it right now. Say VSCO is at 41.57. The closest option is 2 weeks out. 41 would be the 42, and that's paying right there, $2.45. All right, but I'm losing, holy cow. If I buy it at 41.50, I sell the 42s. Okay, but then the stock has to go up. Okay, all right, so I don't like that. All right, so 245. Cool beans. Now, every once in a while you will find that. But here's the issue that I have with monthlies. Okay, here's my issue. You ready? 30 days ago. Whoops, let me get on this side so you can see me. 30 days ago, we shoot up, pull back, back up, back down, back up, back down. So we started out at $30 30 days ago. We dropped all the way down to 33, shot up to 44, pulled back to 41. Great. Now tell me, where's it going to be in 30 days? It's not that easy. Trying to figure out where stock's going to be in 5 days is hard enough. 30 days, I don't want to bother with it. And very rarely will I get 4 or 5%. Because if I'm doing a monthly, that's 4 to 5 weeks. Very rarely will I get 4 or 5% every single time. So this one here, the 42s are going for 245. So let's do some math. Okay, 245 is the premium that you collect on this particular monthly. And what is it costing me? 41.57. gives me a grand total of 5.8. If you like the monthly. Now, I've never put a monthly up on the board, and I have no idea who the hell VSCO is. It's just not on my list because I don't do monthlies. Okay, because I don't want to tie my money up for 1 month. All right, that being said, Lemonade, what do you do when you set a strike below the cost and you can't roll up the next week? You go to the next week. Lemonade, we're selling time. If the premium you're looking at next week is not going to be enough, go 2 weeks out. That's not right. Go 3 weeks out. One time, I think it was in April. Do you remember when we had that big, huge pullback in April? Yeah, that week I got 3 margin calls. Okay, I got 7 accounts. Don't panic. I've done this before. I don't worry about margin calls. It don't bother me a bit. But I got 3 margin calls. I had to take 2 of my positions and push them out 4 months. 4 months. That's 16 weeks. So I lost income on those particular stocks for 16 weeks just to save from losing. I'm a big believer in never sell at a loss. So, see, some people say, oh, just take the loss. You'll make up it in the long run. Yeah, no, thank you. Oracle looks good. We'll take a look at Oracle in a minute. What do we have here? All right, Lonnie. Sav had a really good week. Do you take a 1% or better roll anytime they will give it, even if it's 3 weeks out? No. I like to go 2 weeks because what's going to happen is you're going to find some companies where the premiums are so good, they're going to push you out week after week after week after week. So now you're pushed out 2 or 3 or 4 weeks. Well, great. What kind of income are you having next week? Nothing, because you all collected it all this week. Yeah, that big fat check looks good this week, but what are you bringing in next week, the week after, and the week after? Now, it depends on how you want to play the game. You want to push it out 3 or 4 weeks and do absolutely nothing for 2 or 3 weeks? Great idea. As a matter of fact, we had someone in the chat this morning who didn't want to deal with the holiday, and I don't blame her, the holiday aggravation and trying to keep up with the money. Well, great. Why not push all your options into the first or second week of January? It's 3 to 4 weeks out, and you get 4 to 5% because you're pushing it out so far. And then you don't have to do anything until the 7th or 8th of January. Well, that's a great idea if you don't want to have to worry about it. Well, I got nothing else to do, so I do it on a daily basis. That's me. It's my choice. Now, the one that she sold, she's got no idea what's going to happen between now and that time in January. But she's already made the money. She's already sold the option higher than what she paid for it. So even if it gets filled and the cash just sits there, she still made her money on it. Next. What is next? Procter & Gamble. G.W. Ryder. Procter & Gamble. Another company over 100 years old. Okay, over 100 years old and over 5 decades of consistent profits. I got to keep remembering to come back to the same spot rather than... Wow. Here we go. Hi. Hello. Where was it? Where is it? Look at this. Down, up, down. I'm not going to do all that crap in the middle. We just need the basic outlines. There's the top. There's the bottom. Now, the nice thing about Procter & Gamble, other than the fact it's 100 years old and it's a dividend king, 5 decades of profits, besides that, we're at the bottom for the year on a company that's over 100 years old and consistently profitable year after year after year after year after year. Hell yeah. Let's zoom in a little bit closer, see if there's an opportunity. Here we go. I'm going to say no. Huh? Look at it. Okay, down, up, down, up, down, up, down. No real rhyme or reason to the movement. Okay, the bottom is right here. Now, I like 2 days to the upside before I jump in. Well, that was yesterday. Well, unfortunately, today, she dropped again. So I'm still waiting for 2 days to the upside. I not count, well, you could count this, but I'm not going to. I'm counting this one because that's an up day. Okay, higher high, higher low. Well, today, lower high, lower low. So today's not. So Monday, Tuesday may be great for Procter and Gamble. Might be. I'm going to write it down just in case. See what happens tomorrow. Sorry. 81. Oh, what was I going to say? Cool in the gang. Oracle, ORCL. We found this one. We looked at this one last night. Here's your top, bottom. Where was it? Where is it? Look at this. Down, up, down, up, down, up. Look at that. That looks beautiful. Top, bottom. Now she's bouncing. It's exactly what I want to see. And I like Oracle. It's on my list. So, last 30 days. 30 days ago, we were at the top right here. She drops, retrace, drops, retrace. Here's where we are here at 214. Well, I like the 214s. Let's move this over. Let's move it on over. I just rock it on over. All right. Oracle, 214.33. So, oh, wait a minute. Look at after hours. After hours is 220. All right, so the 220. Look at that, 990. That's over 4%. If you like Oracle, I love Oracle. Let's take a better look. Okay, 30-day high, 30-day bottom. Now she's going up. Okay, where were we? 185. We're at 214. That's only $30. A little over 10%. Actually, a little over 12%. All right, let's take a look. All righty. The 220, you say. There it is. Let's do this to one. There it is at the market. Here we go. Here's the money. Tell him what he's won. Yeah, Bill, here we go. Buy one covered call or a call. 12 December. That's next Friday. We're looking at the 220 call option. $1,073. $1,000 is the profit on this one. Okay, I'm buying it for $219. Where is it? $219.43. And I'm selling it for $220. Walking away with $1,000, and then if she stays above $220, I get all my money back, and I still get to keep that $1,000. Let's find out what the rate of return on that is for 1 week. Clear that. Profit is $1,073, and the investment in this one is $927. Grand total of 5%. If you like Oracle, I'm going to say hell yeah. Yeah, buddy, yeah. All right, here we go. So I like Oracle. 5%. 5% for 1 week. Why the hell not? Well, does it make sense? That's a big question. Buy Oracle at a certain price. Sell it at basically the exact same price I just paid for it. Pick up a nice profit. Get rid of it and then do it again to something else. All right, here we go. Oracle. Here it is. Oracle. Wow, nice and big. I like that. Oracle. 12 December. That's next Friday. 1,073. Oh, wait a second. The 220 call option. Now, I sell options. I don't buy them. 80% of all options expire worthless, so why would I do that? All right. 1,073 is the profit. There's the investment. This is a 5.1% trade. If you like this company, that's what it all comes down to. Do I like this company? Tenley, Game Girl, how are you today? Hello. So, that being said, let's move on to the next one. Didn't we find one before this? Didn't we have another one? 5.1. Let's grab my chair, answer some questions. What do we have? K-Van, what's happening? We will be saying goodbye to Dollar General this week. It was a good ride. Really? Well, let's take a look at it. Dollar General. Let's pull up Dollar General, see what it looks like. I like Dollar General. I've done it many times in the past. Oh, hell no. Ha ha! Holy cow. Okay, no matter what you bought this, you bought it anywhere here. Yeah, that big jump. See you later. Hope you made some money on that one, dude. Lemonade. What do you do when you set a strike? We already talked about that one. We talked about that one. We talked about that one. Let's keep on keeping on. Let's keep on keeping on. Yolanda. Good evening. Franklin, how are you? Nico. Hey, James. How you get that line? Uh-oh. I'm terribly sorry, Nico. I got 9 channels, and it's hard to keep up with all the questions that keep coming, so I have no idea what line we're talking about. Vegan Pixel. Why 4 strikes out? What does that mean? Okay, Vegan Pixel, you're relatively new. Okay, so I don't want to embarrass you or anything like that, but hold on a second. All right. Now, let's move this. See if we can get this question for you. Why 4 strikes out? Okay, so when you're buying and selling stock options, okay, so remember, it's 2 different entities, 2 different animals, 2 different species, 2 different sexes, whatever you want to call it. You know, stocks, options, calls, puts, yes, no, light, dark, up, down, left, right, hard. So I can do that all day long. But here's the thing. Each time you have a choice on a multiple bunch of things, once you buy the stock, it's yours to do whatever you want with it. Hypothetically, if I buy it right now, $225.29, okay, we have 2 options, call option, put option. Okay. In those options, we have what is called at the money, which would be this line right here. Okay? That is at the money. The stock price is 125. Right here is 125. Okay? At the money. Okay? Anything less than 125, 124, 123, 122, 121. So once I buy it at 125.29, I have the right to sell it for whatever I want. Okay? If I want to sell someone the rights to buy it from me at the exact same price I paid for it, $125, well, that person's going to pay me this premium. And that's what I'm looking for. I don't care about the stock price if it goes up or down. I really don't. My only concern is the company profitable and are they sharing the profits? That's my only concern. Okay, so if I buy a bunch at this price, I sell at this price at the money. That line right there, at the money. That's where all the action is, at the money. Okay, I will collect $234. Now, if the stock drops, okay, this would be 1 strike out of the money. That's the 130. Okay, 135 would be 2 strikes out of the money. 140 would be 3 strikes out. 145 would be 4 strikes. So each line you go down is a strike price. Okay, 117, 118, 119, 120, 121, 122, so on and so forth. Once you get to 125, it goes in $5 increments. But it's still the same thing. 1 strike in the money, 1 strike out of the money. At the money, out of the money. Oh, wait a minute, wait. We did this before, a while ago, didn't we? In the money, at the money, out of the money. As long as I have the ability to buy or sell 1, 2, 5, 10, 15 contracts, I could care less what the price is. My concern is when I'm selling an option, I would prefer to sell it at the money, the same price I paid for the stock. If the stock drops, well, now I have to sell one out of the money to avoid me losing. That's one thing I don't want to do. Rule number 2, never sell at a loss. It defeats the purpose of the whole game. I don't want to do that. So as long as a company is profitable, I really don't care about the stock price. Okay, I want to be a little leery of where it's moving. I want to be leery of what it's moving. That's why I sign in every single day. And every single day, you're going to hear me do the exact same thing over and over and over again. Repetition is the mother of skill. Okay? It's the same thing over and over and over again. What did I buy it for? 125.29. What did I sell? The 125s. Where is the stock right now? Right here. What does that mean for me? What direction does it look like it's going? Well, that right there, that big huge jump, normally that's going to have profit taken and that baby's going to come back down again. So the question is, what did I buy? What did I buy it for? What did I sell against it? Where is it at now? Where is it going? And what should I do next? Those questions are always the exact same over and over and over again. Every single position I have gives me something on a weekly basis. Week after week after week after week. If I miss a week, well, that's my own damn fault. Anyway, so Vegan, I hope that makes sense to you. Uh-oh. Someone's trying to correct me. Meta, what will it do now till February? Don't know, don't care. Sorry, Pete. Alex, what do you have for tonight? Oh, for dinner tonight? I had a salad. I'm at that point when I need roughage. Gotta start taking care of the inside. You know, you're younger. When you're young, you eat all that crap, and as you get older, it's time to pay the fiddler. But thank you. It's a strange question, Alex. You're the first. Now, I've been doing this for years, Alex. Nobody's ever asked me what have I had for dinner tonight. That's the first time anybody's ever asked me that question online. Okay, but anyway, interesting. Pete, it's okay. Thanks. All right, thank you, Pete. Do you have any thoughts on Salesforce? You got to give me the ticker symbol because that's not a company that I normally follow. Okay, there's certain companies I can know right off the top of my head. That's not one of them. Sorry. Dr. Dev is in the house. What are your parameters? Plain and simple. Uh-oh. Digital Days has thrown down the gauntlet. What are they? Simple. You ready? Here they are. Here are my parameters. Here you go. It's going to blow your mind when I tell you this. You ready? Consistency of profitability. Weekly options. That's it. Well, first of all, you got to be a dividend stock. Weekly profitability, consistency of profitability, 2 decades. Weekly options, that's it, just 2. 2 parameters, that is it. Consistency of profitability, at least 2 decades. Stock market's been around for 400 years. 400 years. I don't think 2 decades is that much to ask for after 400 years. Okay, if you think that, yeah, no. There's companies out there that are over 100 years old. So why can't I find a company that has 20 years of profits? That's it. 2 criteria. Consistency of profitability and weekly option. Oh, Salesforce is CRM. Okay. No idea what that is. CRM. Here we go. Interesting. I like the chart. I do. 247. Okay. Close to 2%. No, wait a minute. It is 2%. Okay. Well, let's find out the other question. And now, I financial website do you use information? I get mine from Yahoo Finance because his, come on. Oh, no, 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 no. What, today's Thursday? So why is the internet slow? Why is the internet slow? Ends only. That's the only thing I want to look at. You got a choice when you're looking up at profitability. You can take a look at years of what do you call it? Quarterly earnings, or you can go to the dividend. Now, the funny thing about the dividend is funny, but what 2 years? Are you shitting me? 2024, 2025. Why are we looking at this? Who came up with this one? Salesforce. Dude, this thing's only 2 years old. Or should I say it's sharing its profits for 2 years? Now, it's not bad. Now it's at 41. Okay. NTNX. What the heck is that? NTNX. Nope. Who came up with that one? Yeah, I don't do monthlies. Okay? December, January, March, April. I just don't like them. Okay, just too much work for me. I am a lazy trader. I'm terribly sorry. I apologize. You really should find someone else because I'm lazy. I really am. I have a simple strategy. Okay, you take all the stocks that you like. There's about 300 of them, consistently profitable. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, anything on Warren Buffett's list. It doesn't take long to go to Google's, print up those lists, import them into the calendar. Great. This week, what am I looking at? Wonderful. Is it the right time to buy it? Is it profitable? Great. It takes me less 5 to 10 minutes every single day. That's it. I could sit and do it longer, but I have no desire to sit in front of my computer every day. So no, I don't like the monthlies. Don't. My voice strikes out. We did that one. What's the parameters? We did that one. We did. MSTR. Someone bought 312,000 call options expiring in June. Well, let's take a gander at it. MSTR. Well, can't no, can you? Oh, it sounds like an ideal. I don't know why he would go to June. Nice idea. Think about it. Let's take a look just by looking at the numbers. Okay? 450 is the high, 150 is the bottom. A year ago, we're at 375. Now we're at 186. They went from 400 down to 2.25, up to 450, down to 150. That's where we are right now. So let's zoom into... Okay. Now, he said he bought 312,000 share call options expiring in June. Yeah, but which ones did he do? So let's go to June next year. Okay. All right. A 63 delta. Holy cow. Nice. All right, so here where we are now. 186. And he said he bought 312,000 shares, contracts. That's a lot. Okay. For June, well, here's June right here. The current price, 186, is right there at the money, ATM at the money, and they're costing $45 a piece. $45 a piece. Now, that is that 312,000 contracts, 312,000 shares, or $312,000 worth of the options? And which ones is it? See, the reason I don't buy options is even if you buy it at the money right here, 186, here it is right there. You're paying $45. So, if You buy this right here, the 186 at the money right now. You're paying $45 per share. Now the stock, just to break even, he's got to hit 186 plus 45. That's 231. So it's got to go to 231 just to break even. You hear that? Just to break even, it's got to hit 241. Okay, so 241 is just right about there. Right about there. Okay, so there's right about there. Okay, so here where we are right now. Okay, by buying that option all the way out to June, okay, even at the money, it's going to be 45 bucks. So now break even is going to be right here. Okay, so from 186 to 241, he's at a loss because it has to hit the price you're agreeing to buy it for, the 186, plus the amount you're paying for it, the $45 a share, just to break even. And that's 241 just to break even. So anything over 241 is going to be a profit. But it always depends on what do they know that we don't know. Felix, Oracle has earnings call this coming Wednesday. Thank you there, kiddo. Bully, BDX. What the heck is BDX? Get my chair. I need me my chair. All right. I don't want that. Okay. Bully, BDX. What is BDX? BDX. No. Who came up with this one? Bully. Okay, Bully. I don't do monthly options. Okay, December, January, March, blah, blah, blah. Yeah, I don't do those. The numbers just don't work for me. I like simple, safe, weekly. Powell going bye-bye. Okay, thank you. SB 1981. General Electric, you say. General, interesting. Check this out. Here's your top. Here's your bottom. We actually got a double bottom. Once in December and then again in April. Sorry, habit. Once in December and again in April. She went up, she pulled back. She skyrocketed, now she's pulling back. Profit taking, bouncing off of that. Let's zoom into that and see what it looks like. Okay, here's your top. She drops here, back up, back down. Now she's going back up again. Do you like General Electric? Or do you like General Electric at this current price? $292. Well, the 292s are going for $445. Okay, current price $292. The 292s are going for $445, 1.5%. Well, let's take a look at it. Get rid of that. Covered call, 292.50s. There it is. One contract. Now this one might be a little on the high side because it's almost $300 stock. So that number might be a little uncomfortable, you guys. Yeah, $28,000 for one contract. All right. Buy one covered call, General Electric, 12 December. That's next Friday. The 292.50 call option gives me the right to sell it to someone else at this price, at that price. Here's my profit, $510. What is it going to cost me? What is my investment? $28,000. So I'm creating what I like to call a weekly cash producing asset. And this one just so happens to be giving me $510 for the week. Let's figure out. Profit $510. The investment $28,740. Grand total of 1.7%. Do I like 1.7%? Well, it's not as nice as 4 or 5, but my goal is only 1. So I'll take it. I'll take 1% on General Electric. They've been around for over 100 years. Why the hell not? And here we go. General Electric. Whoa, that was just a little too big. All right, here we go. General Electric, 12 December. That's next Friday. The 292.50 call option. Here's my profit, 510. Here's my investing, 28,000. Now the investment is kind of like any investment you're going to make in any financial endeavor. The main objective is it a safe trade for you? Do you consider it to be safe trade? That's what it all comes down to. Because after all, we're talking about your own money. How are you investing your money? Why? The why is probably more important than how. Why are you doing it? And then you got to come up with a strategy. What is your strategy for a safe investment? And what is your goal? Well, we're at 10:38. Holy cow, we got like 20 minutes left and we're done for the weekend. Yay! Alrighty. So, 1.7. Do you like General Electric? That's a big question. Think about it. What else we have? Oh, DCB wants to take a look at Visa. Alrighty, Visa. Okay, we were back to the beginning. Let's start at the very beginning. It's a very, very good place to start. A, B, C, 1, 2, 3, do, re, mi. All right, anyway, that was from Sound of Music, if you guys remember that one. Wow, I'm dating myself. Holy cow. All right, next, Visa. Visa, the days, my friends, we thought they'd never end. 327. Here's the high, the low. Where was it? Where is it? Look at this. Up, down. I'm going to say no to Visa. Sorry, it's just dropping. What's going on? Well, why do we even want to look any further? Look. 30-day high, 30-day bottom. There's the movement. We missed it. We're 2 weeks late on this one. Hey, we should have jumped in right there and taken that ride. Now she's coming back down again. Fine. We'll pull it up next week. Write Visa down for next week. Ooh, we got Verizon down for next week too. And VFM. Nifty. All right, next. We did Oracle. The line at the money with the black and purple strike. Okay, Nico, I didn't put that line in at all. That's something that Think or Swim put in. Okay, if you're talking about the white line, that line right there, that's for the interactive vibe board that I'm playing with. Well, it's my newest toy. All right, let's keep on doing it. 1. Misty, let's hear. You don't want to hear my input on Misty. You really, really don't. I like it. ST. Misty. Misty, whenever you're near. Okay, so it's a couple. Dividend from Misty. April 24. It's 2 years old. Why would I want to invest in a company that's 2 years old? I have no desire to help somebody build an empire. I'd rather go to where the empire is already built. Think about it. If you're going to go into a fortress, do you want a fortress that's still in the works of being constructed 2 years old? Or do you want to go into a fortress that's over 100 years old? Now, it's been there for... Anyway, it starts out at 412. 412, very first dividend. Okay. to 250 to 185 to 20, 130, 20 cents, 13 cents. What the hell do you think MSTY is a good investment? If its very first dividend was $4 and November dividend is 13 cents, how the hell can you say that's a good investment? And it's only 2 years old. Hell no. That's a no. What the hell are you thinking? Nick, do you let spread stop you from buying contracts? Okay, Nick, I'm not 100% sure what that means. It makes no sense at all. Do you let spreads stop you from buying contracts? I have no idea what that means. Juan, did you get a chance to look at the emergency energy funds yesterday? Okay, let's take a look. You. Okay, for use. Let's take a look. Energy Fuels Incorporated. What is that? Owners 1, 2. CRM, we just looked at it, was a no. Misty was a no. Oh, we had a question. What was that? What's this? Well, what if you set a strike below your cost and you can't roll up? Lemonade, you could. Okay, when you sell an option, you always to do something. Okay, it is 1 week out, whether it's out, whether it's 2 months, whether it's 5 months, whether it's a year out. You have choices. Okay, sometimes, lemonade, sometimes you need to pay an advisor a question that you cannot answer. Okay, what is that answer worth to you? Because you got to remember, whoever you're looking to advise had to earn it or learn it, and now you want it for free. I'm not saying I'm not asking you a question. What I'm saying is, if you have a question that you don't know the answer to and you can't come across an interesting way of asking the question, okay? Because what you said is, what if you set the price below your cost and you can't roll up? You need to ask someone who knows how to get out of that. Because, all right, here, I'll give you an idea, a thought. Let's go here. Let's go there. Go here. Roll. Okay, roll, because you can always that. All right. When I want to roll a position, I have all of these things down here to contribute to me making a decision. Well, at this moment in time, I got the 12 December 1850 call, and it's giving me a 22-cent credit. Watch what I do. If I change the strike price to the one from next week, oops, I got to change it over here. I'm trying to change it on the board. It doesn't work that way. If I try changing the strike price, okay, now I have to pay to move it by just changing the strike price. Now, if that doesn't work, watch what I'm going to do now. I'm going to go to the date. And I'm going to change the date. From December, I'm going to go all the way into February. And it's not traded. Let's change it to 20. Okay? I changed the strike price. I changed the strike date. And now I'm back to a positive again. This number will consistently change the more you play with these numbers here. Dates, numbers. Okay, what's never going to change is what I paid for it. See, BBWI, this is what I paid for it. This is what I sold. This is what I collected. This is where it's at now. Okay, what did I buy? Right there. What did I sell? Right here. Where's it at now? Right there. What should I do next? Okay, change the strike date, exchange the strike price. Go up and down until you push and shove until you find something that you're okay with. Because we all have a different journey. We all have different goals in mind. What works for me might not be okay for you. You got to figure out what is it you want. And then just step back for a second and think. Before you came here and learned you can do it every single week, most people just bought a stock and held on to it for years. Well, now I'm coming to tell you to do something totally different. Buy it this week, collect a profit, sell it, buy another one next week, buy it, sell it. It's not something that people were taught to do. You were taught, buy a stock, hold on to it for decades. When you retire, you sell it and you use the profits to have a comfortable, wonderful retirement. That's what we were taught. Doesn't seem to work that way. Mark, it seems you need a lot of money to do this. Now, Mark, it depends on a few things. Number one, where are you starting from? That's number one. Number two, how old are you? When do you plan on retiring? Because how old you are and when you'd like to retire is one thing. But how old you are and how old your boss is willing to put up with your crap, it means if you hit 70, 80, 90 years old, eventually your boss can say, yo, Mark, keep your ass home. Okay? There's a lot of unanswered question when you make a statement like that. You do not need a lot of money. You need consistency and time. Okay? So again, it goes back to that time. How old are you? If you're in your 40s and you want to retire in your mid-60s, you got like 20 some odd years. So, oh, whew, that was a good one. So it's going to come down to a math equation, Mark. Okay? I started out in the 1990s with $12,000. That's not a lot of money. And I refinanced my house. I took the equity out of my house and I played with that. Now, granted, I made a lot of money and then I lost a shitload. But then I made it all back again. Not the point. The point is consistency and time. Okay? Now, my grandson is starting out with $50. He's 5 years old. When he becomes old enough to tap into his account, I like to think he'd have a decent amount. Because he's 5. That's 13 years. Oh, that one just finished. Imagine that. Just shut off automatically. We got 10 minutes left to go. Let's see how many questions we can come up with. Holy cow. All right. What about EPD next time? Al, good evening. Rob, BB, we'll have to do it next time. Freddie, what are you teaching? Freddie, we're teaching investing for weekly cash flow using dividend stocks and weekly options. Sam, why are you spending so much of your time here? Because, Sam, I'm creating a video diary for my children and my grandchildren. So when I am gone, part of their inheritance is going to be make sure they can pass a test that makes me safe to say, okay, you can have this money. Because I'm not giving my children the money, they're going to have to earn it, which means they're going to have to know how to invest it properly, not touching the principal and only spending the interest. So it's going to be a generational wealth type estate fund thing that I'm creating. So the reason I'm here is that when I'm gone in 20, 30 years from now, my children will have these videos to go back on and learn how to do this. Okay? And it's also a journey. I'm creating this is the beginning of my empire. Let's call it that. The beginning of my empire, the estate that I leave behind when I'm gone. This is the formative years. Okay? You are at the tail end of 2 years. Now, last year, every single day, I did 358 days straight. I only missed 6 days last year. Okay? 1, I was sick as a dog. 2, I had to take someone to the emergency room. 3, 4, 5, and 6 were 4 days during the hurricane in 2024. Okay? There's no electricity, no water, no internet, no nothing. So 4 days, no electric, no water, no internet, nothing. So I couldn't broadcast. But I was on every single day. Okay, 9:30 to 11:30 every single day for a whole year. This year I'm taking I'm taking Friday nights and Saturday nights off. But I'm here every other time. 5 nights a week. Okay, giving back to the community, starting my empire, so to speak. So next year, when I'm going to sell the stocks in my own company and sell my own cryptocurrency, people can go back to the 2 years that I spent giving away information for free to see exactly what I'm doing, just to see if I'm a good enough investor for them to invest their money into my company. So I'm laying the groundwork, so to speak. That's what I am doing here. Laying the groundwork for future generations to enjoy. Okay? So in 5 years from now, I can say, hey, 5 years ago, I was online every single night sharing for free the trading strategy. So that's why I'm here. Misty was a 4-week dividend and recently went to weekly dividends. That's why they're paying 33 cents. Thank you, Juan. But still, it's only 2 years old. No, thank you. Hey, Mark, boat. Is boat actually a company? Or are you asking me about my boat? B-O-A. Wait a minute. Wait more. No more. We're done. Okay? No. We're done. Because it's almost 11 o'clock and I got a bunch of questions I want to get to. Why Max be a no? Mark, thank you for that. Why Marks give weekly dividend? Yeah, good. The numbers still look terrible. Sam Engineer, thank you. What else do you do for fun? Do you go? Oh, hell no. I'm blind in one eye. You'll see me, you see my eye wandering every once in a while, so I can't really see out of this eye. Okay? So every once in a while I'll wander and people say, what's wrong with your eye? Yeah. Got nail stuck in it a long time ago. But thank you for reminding me. So what do I do is I have a passion project. I'm creating a solar electric pod drive system for boats. Because I don't know if you know that Florida is like the boating capital of the United States. There's more boats registered here than anywhere else. So as you can imagine, when the engines get old, people don't want to put new engines on. Because you can get a brand new boat for less than a new engine. And who wants to buy a 20, 30-year-old boat that needs a new motor? They just assume buy a new one. So there's a lot of boats that people just give away. Okay, solar electric pod drive system. If the sun is shining, I can go up for a free ride on a free boat after I pay for all the electric and batteries and all that stuff. But still. No, Dev, you don't want a free boat. Because people think they want a free boat, but free boats cost more than the ones you got to pay for. Yep, you'll do the electric and the battery. So, yeah, but see, I get that part. But I'm actually manufacturing my own pod drive system. So all you got to do is just drill the holes, slap it in, and mount the motors, and then you're good to go. It's rather ingenious if you think about it. Anyway. Bring on another 1,000. Yeah, thank you, Farber. Oh, that's smart. All right. What else do we have for more questions? All righty. So you guys over here, let's see what we got. Okay. Christian, VGT. Let's take a look at tomorrow. Mole's done. Okay. J.O., what's happening? Kyle Larson, good evening. William, how are you? Blaine, good evening. Vinny, how are you? Sid? Chris, is it possible to recap what's going on the board? Oh, what's on the board? Yeah, hold on a second, Chris. For those of us that missed them earlier. Okay. Why are premiums so good on GPCR? Sam, you're going to have to ask me tomorrow. Not tomorrow, Sunday. All right, because tomorrow is my Friday and tomorrow's Saturday. So I won't be on tomorrow night and I won't be on Saturday night. But I'll be back on Sunday night. And if you can remember asking me Sunday night, fine. Why bull trade, though, since the covered call is below your strike? All right, McHugh style, I'm not understanding that question. Okay, day trader, INFY. Never heard of it. INFY. I'm going to say no. I don't do monthly options, and I don't day trade. Okay, I want to spend 5 or 10 minutes. That's it. What's on the list? List, that is right there. Okay, what's on the list? What do we have? We got Coca-Cola, McDonald's, Stanley Black & Decker, Lennar, Kimberly-Clark, Ben Franklin, Pepsi, General Parts, Walmart, Abelmau, Nordson, T. Rowe Price, Cincinnati Financial, McKesson, Illinois Toolworks. Okay, most of these companies you've heard of. I don't do companies I never heard of. Okay, I'm not a gambling man anymore. In my younger days, yeah. Nowadays, no. I'm 61, I'm going to be 62. No desire whatsoever to add to my vocabulary. Good afternoon, how are you doing today? Welcome to Walmart. Will that be paper or plastic? Will it be cash or card? You know, I have no desire to do, I have utmost respect for those people, but I have no desire to do that myself. Yep, you and James should work together, install that system for him. Okay, I'm a truck mechanic now, working in Toronto, Ontario on the afternoon shift. I would love to help. You know, Faber, it's December. Toronto and Ontario, it gets freaking cold, dude. Jump in that truck and head south. Jump on I-75. I-75 goes right into Florida. Let's chat crypto. Should I pop money into the S&P 500 here with the dip, with a drip, or is there something better? Oh hell yeah, dude! There's a whole shitload better than S&P 500. That's the plan someday, dude. You should make the plan a lot quicker. My house is right off I-75. Cool. No way. Dr. Dev, I'm right off of 270. No, not right off of 275. I'm off of 19, which is off of 275. I have to make my million trading first. No, actually, you don't. Okay? Faber, here's a question for you. How much money do you need? Not want. There's a huge difference between wanting and needing. How much money do you need in order to, throw everything into an RV? $1,000 a week, dude, that's only $100 grand. $1,000 a week is only $100,000. You don't need $1 million. Okay, 1% of 100,000 is 1,000 a week. That's 52,000 a year. And if you set up your account properly, you don't have to pay taxes. I have another year and a half. I'm stuck here for a while. No. I refuse to. Well, I would only believe that if you have ailing parents that are in their last stages of their life. My mother's in her 80s. She's probably not going to see another Christmas after this year. Okay, we all know that. I'm getting my computer on. I have no idea what that means. But I understand if you're stuck somewhere. I'm stuck here because my mother's at that point in her life. So, yeah, I don't want to be on the road somewhere when that happens. I want to be right down the street. So I go visit her, 2-3 times a week. All right. INFY, never heard of it. Why the bull trade, though, since the covered call is below your strike price? Marcus, I'm not 100%. Oh, McHugh, I'm not 100% certain what you mean by that. GSAT, look at it next time. 86 is in the house. Slim Jim, new here. Matthew, FDUSTRNNTES. Dude, a little late because we're done for the night. I'll be back on Sunday. Dev, it's a part of life. You know what? I never ever wanted to be 62, but you know what? It's right around the corner. And 10, 15, 20 years from now, it'll be my time to say bye to my kids and my grandkids. Okay? My mother's a lot braver than I was. I would have had someone stuff a pillow over my head a long time ago. You get to a certain point, it's just not worth it anymore. Or is it? I don't know. It's to be in constant pain every single day. Stuff a pillow over my head. Anyway, let's keep on going. Alrighty. Intel. Ooh, the Trader Daddy. You're new here, dude. Love Intel. I do. We'll have to look at it next time. Tufan. Pfizer. We'll look at that next. Kyle. Target. CNQ. No idea that one. Conastra. Whatever. Verizon. We looked at it already. For my S&P 500 picks, I was thinking MNST, nope. NPWR, nope. CPRT, nope. ISRG, nope. INCY, nope. TPL, nope. ANET, nope. ERIE, nope. GEV, nope. Sorry, didn't mean to post like that. Doesn't matter. You can post any way you want. I'm just trying to understand what you're looking at. Apple puts, ooh, maybe. Target, like Target. Matthew, think that's funny. Kevin, CVS, please. Ooh, of course. Damn it, CVS is going to be closed. Vail, maybe. MSL, please. 100% old. I have no idea what 100% old means. What does that mean, 100% old? All right, let's find out what is he wants to do it, please. MSL. MSL. Okay. No options, hell no. Or is it MSI? MSI. Hell no. Neither one. Sorry, Omar. I don't like either one of them. Vail next time. ARC next time. Kyle, how you doing? Palacois. Palacois. It almost sounds... Hold on. I want to say Greek, no, Roman, Palacois. Target, we'll look at it later. Oh, Johnny Boy, UNH and NTR, well, I like both of those. Will you come through Detroit when you do the Great Loop? Well, the Great Loop goes up the East Coast. Now, we're probably going to go up the Hudson and into the Erie Canal and then into the Great Lakes. I don't know if Detroit is on the list, but we'll probably have a map, and we will be broadcasting every single night while we're on the loop, and we're also going to be doing live classes on the boat for few select. Okay, Omar, we looked at US MSI, and it was a no. Oracle has earnings next week. Yes, K-Van, I know. Do you have to sell before expiration? Anthony, every situation is basically the same. A, B, C, 1, 2, 3. Where are we? What are we going to do? That type of thing. What did I buy it for? What did I sell against it? Where is it at now? Where does it look like it's going? What should I do? Okay, it's really... excuse me. All right, who is that one? Anthony? Anthony, here, I'm going to pull this up. I want you to show this really quick. You ready? What did I buy? HPQ. What did I pay for it? $24.51. What did I sell? The 24. What did I pick up? 48. Great. Wonderful. What do I do now? Well, I have a working order for it right here. What was that one? HPQ. Right there. I'm trying to roll it forward. Market maker doesn't want me to. So tomorrow, I have to roll it forward. So tomorrow, I will be playing with all those numbers. Which one makes sense? Which one is safe? So on, so forth. So, that being said, let's call it a day. Okay, Up Down Trader, thank you for all the help, dude. And we're going to do this another day. Okay, we're here every night. Sunday, Monday, Tuesday, Wednesday, Thursday. Now, what I tell everybody before the night is over, if you feel like you want to have a conversation with me specifically, okay, I promise you 100% I will not try to sell you anything. We'll just have a chat. Drop me your number, make a call, and we'll just chat. Wait, never mind. I don't see Detroit on the map. Well, then more than likely I won't do it. But I will be going through Chicago. Have a good weekend. Good night. Why does it have to be a dividend stock? Ooh. Well, the reason why dividend stock is because dividend stocks are predictable. They are consistent and they are safe and they share their profits. You could do whatever you want. You want to do a growth stock? Have at it. But when a growth stock goes down, you don't get any money because the stock is dropping unless you sell calls or puts as it's going down. There's ways you can do that with profit, with options. But I like dividend companies because they're predictable, consistent, safe, and profitable. That's why I like dividend stocks. As they go down, I'm still collecting a dividend. Okay, so even as a stock's going down, the dividends still increase, especially the ones that I get. Because you cannot be a dividend king if you decrease your profits. If your profits decrease, you get booted off of a list that took you 50 years to get onto. And trust me, most of those companies, once you make it onto that prestigious list as a dividend king, trust me, you're going to try to do everything you can to not get kicked off. And if you drop your profits, you get kicked off. So that you know, if it's a dividend king, they are consistently profitable. And that's what I'm looking for. Consistency of profitability. I don't care about the stock price. I don't. The question I have for you, if you buy a stock here at 371, I buy the exact same stock here at 500. Are you getting a higher dividend than me? Or are we getting the exact same dividend? Okay, so let's say I buy 500 shares. I got 5 contracts. You buy 500 shares. You got 5 contracts. Okay, let's go here. All right, so at the current price, 371, right here, 640. That's at the money. Okay, if you bought it here, you're collecting this, the 370. That's what you paid for it. Now, I paid 400, so I'm not selling this one. I'm going 2, 3, 4 strikes out. 4 strikes out, 3 strikes out, 85. So you're getting $6, I'm getting 85 cents. But I'm still collecting that dividend, and I'm still collecting a premium. Granted, not as high as yours, but the dividend doesn't change. Okay, if I buy it at 500, I'm getting the exact same dividend that you're getting. The only advantage that you have buying it lower than I did is that your profit percentage will be different. That's all. If I have cash flow coming in, I really don't care. But I want it to be safe, simple, predictable, consistent. I'm aiming for 1% per week. You guys have a great weekend. We're going to do this all again next week. Yay. All right, so you guys have a great night. Now, you guys over here, I'm going to see you tomorrow at 2:30, just before the market closes. You guys have a great night. Done there. You guys down here, thanks for hanging out. Cool beans. And now the end is near, and so I face the final curtain. My friends, I'll say it clear. I'll state my case, for which I'm certain. I've lived a life that's full. I traveled each and every